All right, good morning, everyone. Happy Wednesday. Let's do a quick sound check here in the Essentials room and then over on the YouTubes. Hey, what's up, Mirza, Lorna, Omer, Russ, Stick, Miss Cheryl. All right, the whole gang is here. What's up, Earl? So, first order of business. Check out the economic calendar here. And everybody's favorite. Your favorite Fed speaker, Mr. Powell at 9:15 a.m. Eastern. So we'll get graced with his presence 15 minutes before the cash open, which just means things might be a little noisy this morning, a little bit of back and forth. I'm not too sure how long he's going to speak for, but regardless, be mindful of that. Alrighty. And then up to this point, it's kind of been a pretty light week. Not too much action on my end. We sold a call credit spread on the S&P futures on Sunday night. We took the paycheck from that on Monday morning. We flipped on to another call credit spread. We took the profits from that on Tuesday, and now we're waiting on the next trade. A couple things here on the futures. On any morning where Powell's not about to speak, see how they got the hourly squeeze here? And they're trying to grind this back towards resistance, right? They're trying to push it up towards that breakout point. And they're doing that with momentum below zero. Usually means that they can't get that positive cross. You would look for a little bit of a dip. Price comes back in, everything stabilizes, then they get the positive cross, and then you try to see that squeeze fire to the upside. But we're not going to jump in front of JP. So for a couple swing trades here, guys, admittedly, swing trading has been a little boring the last, really since the short squeeze started. Granted, if you bought calls before the short squeeze and you've held on, beautiful stuff. But everything remains a little bit stretched here. So I don't so much need a pullback all the way to the daily 21. But for the S&Ps, the QQQs, names like Amazon, names like Microsoft, Meta, Tesla, Broadcom, based on the structure and the signals for now, I would be willing to buy them all the way down to the daily 21. So I don't need that full pullback. But for the futures, if I'm willing to buy them, all the way down to 43.20, I'm thinking I can probably get a better entry than 4,400. Maybe somewhere in the middle is kind of the sweet spot. So we are waiting on the pullbacks, but I still think the biggest setup we have right now is going to be the weekly squeeze here for the QQQ. So we'll check a few things here on the daily first. But you're a little bit stretched. So like we talked about on Monday, everything comes down to that first pullback. They tried this once, right? They're pushing. Ooh, boy, we're back above that 21. Ooh, boy, we're back above that 50. Right, here comes the bulls. And then the first dip, momentum goes back down. The structure falls apart. Right back down we go. So they failed back here. You kind of have the same thing back here. Right? Big short squeeze, big push. We actually back here got a daily buy signal. And they're holding, and they drop the ball. So again, it all comes down to that first dip. Could be a dip to a daily 21 EMA. Could be a dip to an hourly 21 EMA. But it all comes down to that dip, and then how does the market handle that dip? We pull back towards 370, 365, and the structure holds up. You've got your lower time frame buy signals. Everything holds up pretty good. Then I think you're looking to buy those calls for that weekly squeeze. Right, I don't want to do it up here. I want to do that on the kickback. Pulls back, pukes. Pulls back, it pukes. They might go 3 for 3 here with the pukage. Or we get the flush. And the bulls come in. Structure holds up. You're getting some fresh 5-minute, 15-minute, 30-minute buy signals. All right, if that's the outcome, then I think based on the weekly squeeze, you want to buy that dip. And keep in mind, the theme here I'm seeing on the QQQ weekly, it's kind of all throughout the market. More importantly, it's all throughout your big tech names. An Amazon, a Microsoft, a Meta, a Google, a Tesla, etc. And it's that slingshot kind of behavior. So the squeeze gives us what? It's just compression. Market's catching its breath. It's putting back the Gatorade. It's carbon up. It's getting ready for that next big push. You had one back here. The big push was much lower. You had a big squeeze right there, obviously. Really nice action to the upside. And now we got the current squeeze. But all we know from that is just compression. Market's catching its breath, and 4 to 8 to 12 to 16 weeks from now, there's probably going to be a pretty big move. So along the way, you're watching what? You're watching your structure indicators. You're watching your momentum indicators. Now, what I mean by slingshot is we enter compression. Momentum breaks under zero. Not a great thing for the bulls. And then you're getting a couple chinks in the armor as far as your structure. You get one weekly close under the 21 EMA. You get a second weekly close under that 21 EMA. So now you're at the point where structure-wise, momentum-wise, everything's leaning a bit more towards that squeeze monster fire short. All right, they're pulling on momentum, they're pulling on structure, they're pulling on the price. And then right before she's about to fire short, you get that one big candle. It wipes away all the bear's progress. Now we're going for potentially 2 closes above that 21. We've got a much better daily chart. We've got a 4-hour buy signal, a 2-hour, a 1-hour. Again, comes down to that first dip. But if everything can hold up firm on that first dip, it gives that squeeze that potential slingshot kind of move. They pull momentum, they pull structure, they pull the price, and then without firing to the downside, just snaps right back to the upside. You get your dip, structure holds. You try to play for continuation higher. The first week we close under the weekly 21, you have to can that entire idea. So we'll call it 360. The whole thinking here, the squeeze wants to slingshot higher, it comes down to 360. We get the first decent gust of wind, so to say, and everything holds above 360. I think you want to buy that dip. Go out to January, February, March of next year, and then just try to sit back and let that squeeze work as advertised. I think you can play it a lot more confidently. You can play it with a lot more size once we get that pullback. The pullback does 2 things, guys. One, it's going to give us a better entry as far as risk reward. I'm telling you that we're wrong here on the thinking the squeeze wants to go north if we're under 360. The first Friday afternoon, we're going towards a close under 360. The whole idea comes to an end. My target here, before I even get the buy signal, is 393. So I'm going to call it 400. By the time things push a bit more, by the time we actually get the buy signal, it's probably going to be up there at 400. So for this whole QQQ weekly squeeze discussion, there's our 2 levels. If the squeeze fires long, we're looking for $400. We've got to pump the brakes on the entire idea if we're under 360. So now week by week, if we're working based on those 2 levels, where's my best possible entry? Where can I get really aggressive? Where can I put on the most size? Well, that would be an entry directly on top of 360. If I can buy it down there at the daily 21, think of how small my risk is. I'm going to try to buy it here, and I'm taking that trade-off down here. 2, 3, 4, 8 weeks goes by, the squeeze works as advertised. We're going to be up here 395 plus. So I'm not saying that I can't buy the QQQ until we get 360, but there's an aggressiveness scale. If I'm buying it at 395, I'm probably going to risk $100. If I can buy it at 360, I'm comfortable risking $10,000, $15,000. So swing trading, buying the dip, that aggressiveness scale goes up and down in relation to how close we are to that 21 EMA. If I can buy the calls here, I'm going to maybe lose 10, 15, 20% to more than likely make 100, 200, 300. So take that kind of thinking and apply that to Amazon. All right, Amazon's got a beautiful weekly squeeze. Perfect structure, perfect signals. And then even better, under the weekly squeeze, there's I believe we got a 3-day or a 2-day squeeze. There's also a 3-day squeeze. My target for now from the weekly squeeze is 150-ish. And like the QQQ, like Google, like a Microsoft, I'd be willing to buy it, especially with a daily buy signal, all the way down to what? All the way down to about 133. So put aside the calls, put aside the spreads and all that. Just imagine we're buying the equity. I'm just going to buy straight up shares of Amazon. If I buy it today at the open, all right, 143 and change, how's my risk reward? Well, maybe I'm going to catch $7 up here to 150. Or maybe I'm going to take $10 on the chin all the way back down to that daily 21. So on the equity, if I'm risking $10 to make 7, how's that going to be expressed to an options trade? If I buy Delta 70 in the money calls, I'm probably not going to be on the right side of risk reward. If I can buy Amazon at 135, it's a totally different trade. Now I'm going to risk $2 to $3 on the equity to potentially catch $15. All right, now whether I'm buying calls, doing a debit spread, whether I'm selling credit spreads, on the equity itself, if I'm risking 2 or 3 to make 15, that options trade is probably going to look pretty attractive. So for everything I'm going to show you this morning, same thought process, same discipline, same setup, really. So here's a weekly. Beautiful. Perfect 10 out of 10. Good structure, good trend. I like it up here. I love it down here. Who else is next? We got Meta. And I don't think Meta is as far above that daily 21. But nonetheless, the weekly squeeze, very, very nice stuff. 10 out of 10, good structure. When that squeeze gets around the firing, you're looking for 345, 350. Right. Where do I got to can the entire idea that the squeeze wants to fire to the upside? Well, that'd be under the weekly 21. So we'll call it 294. All right, well, now I got my 2 levels, right? We'll call it 350. That's where I think it could go. And then 294, that's pretty much where I'm wrong. So now the entire trade's been mapped out. What direction do I want to play it? I want to play it to the upside. Bulls get 10 points, Bears get 0 points. I can really only do one thing. So I've already chosen my direction. I've already chosen my upside target. And I've already figured out where I would be wrong. So until that weekly buy signal disappears, all right, as long as it's valid, as long as it prints, what am I waiting for? I'm going to wait for the entry that allows me to work the best risk reward possible. If I'm wrong at 295, can I pick this up at 310? That's not too bad. Can I pick it up at 305? The closer I can pick it up to 295, the bigger I can trade it. And then a few more for you guys. Same scoop here for Microsoft. Super strong, super bullish. It's got a really big weekly squeeze. It's also $20 above the daily 21 EMA. So put it in terms of percentages. If I buy Microsoft up here today, and my daily 21's down there at 340, what does that imply? This is a way that I think about entries and exits. If I'm buying it at 360, with my daily 21 EMA down there at 340, to me that implies as a swing trader that I'm buying Microsoft fully open-minded and fully willing to see this gap down 6% tomorrow. And guess what? From here, if Microsoft gaps down 6% tomorrow, I'm looking at a good daily chart. It'll still have good structure. It'll still have good momentum above zero. It'll probably still have a daily buy signal. So do that math. All right, I'm buying it at this price. It's a valid setup all the way down to this price. I want that number to be maybe 1% or 0.5%, not 5 or 6. If Amazon gaps down 4, 5, 6% tomorrow, I want to be sitting down there at 340 drooling, waiting to buy those calls. Not waking up tomorrow, Microsoft's down 3, 4, 5%, and I'm like, damn, I'm taking this all on the chin. You never want to get crushed in the very pullback you want to buy into. So we're waiting on that puppy. And then one name kind of outside of the top 10. And here's where I'm at. Like, I'm going to focus solely on these 9 or 10 names. From there, if anything's also going to make its way onto the watch list, it has to be perfect. So Broadcom has actually wiggled its way onto the watch list for now. So check this bad boy out. And still, I want to buy it on a dip. But really, really good stuff here. $10 out of 10 on a daily squeeze. There's a 2-day squeeze. There's a 3-day squeeze. And then check out the weekly. So we call this the quadruple. You've got a big weekly squeeze. Inside of it, there's a 3-day squeeze. Inside of that, there's a 2-day squeeze. Inside of that, there's a daily squeeze. If you want to know what kind of move that can lead to, go look at a few charts back in April, May, June. NVIDIA, Netflix, a lot of things back in April, May, June had the same exact setup. Their daily squeezing, their 2-day squeezing, 3-day, weekly. They all begin to fire one after the other. It's like the snowball effect. Daily squeeze leads to a nice push, but the 2-day squeeze leads to a bigger push. In the process, you trigger the 3-day, then you trigger the weekly. Squeeze on, squeeze action. And I think this one could also have that slingshot kind of move. Squeeze prints. They pull momentum down. They really don't get the structure to budge. So really strong, really bullish. Now, if they can fill the gas tank up, get momentum back above zero, probably looking for about $1,000. Just nice continuation of that weekly trend. And then the final one for y'all will be Tesla. Tesla is not as clean as Amazon or Meta or Microsoft or Broadcom for that matter. But it's a bit more of like a set it and forget it kind of swing trade. This weekly squeeze actually looks the most slingshot-ish, because I think this one got the closest to firing short. Squeeze prints, momentum breaks, the structure begins to break under the 21, under the 50. At one point, you're under the weekly 200. My thinking is on that break of the weekly 200, you probably got a lot of folks jumping in getting short. By the end of that weekly bar, they're already underwater. They took it under the weekly 200. We never closed under the weekly 200. So I'm looking at it saying, all right, as long as Tesla's above 208, 210, anybody who got short on that break, they're a little bit screwed. Now, every inch Tesla goes higher from here, they're feeling that pain. They're feeling that pain. At some point, you're going to get more short covering. It's kind of the thinking. So yeah, like a set it and forget it kind of trade. The exit would be a weekly close under the weekly 200. I think you go out to March or April, grab a couple of the cheap is a relative term, but grab some cheap 300 strike calls, and then let the thing go. Tesla breaks back under the weekly 200. You take the trade off. Come January, February, March, the squeeze does slingshot higher, and you're up here back towards those highs. It'd be a pretty big trade. So that is what I got for you guys. QQQ weekly, Tesla weekly, Meta, Microsoft, and Amazon weekly. They all get a bit easier to trade, and I can trade them a bit more aggressively when we finally get a dip. So we'll see if Powell here in about 5 minutes wants to bless us with the dip or not. But all right, y'all, I got a few minutes here. Mastery members, I'm not going to be on the mic this afternoon. Got a couple different appointments. Let me see. Okay, that's a weekly chart. I'm saying that don't look right. But yes, I won't be on the mic in the Mastery today. But I'll be live with y'all on Thursday, on Friday, and then I'm hitting the road on Sunday. And I'll put all this in the alerts. But we'll probably do our Sunday session on Saturday, because I am off to Buffalo, New York. Warm and sunny Buffalo, New York. Yeah, Earl, let's take a look at Crude. What do we got going on in Crude? My charts have not been this slow in years. And I'm thinking it's a thinkorswim problem. My internet is good. Everything else is kosher. All right, the old Crude bug. It's almost the opposite of Amazon. Amazon's got bullish momentum. It's got good structure. It's got buy signals. but it's a little too far from that daily 21 for me to want to buy it. Crude's just the opposite. The momentum is busted. The structure is busted. You get a bunch of sell signals. You just fired a daily squeeze. Now, keep in mind, you're only 3 days into that squeeze firing short. A good squeeze can give you 5, 8 to 10 days. But for me, it's a bit more of the entry. I'm kind of wrong up here if I get short around. Well, the traditional exit would be, all right, we're back above that 21 EMA. I'm going to cover the short. We're a little too far for that entry right now. What you could do is make that daily 200 your 21 EMA. That's going to become your over-under. Short it under 78.25. See if that daily squeeze can't take it lower. But then back above that level, probably cover the short and then reevaluate. For me, the real answer is the high quality trade here. I mean, that was presented 3, 4, 5 days ago. Daily squeeze, sell signals right under that 21. Then you play it down to that daily 200. And then if you're bullish, I think you wait for a close back above that 200 SMA. So bullish or bearish, I think you're working around that 78.50-ish level. Yeah, David, Broadcom's not it's not the cheapest of names, that's for sure. And to your point, if my memory serves me right, yeah, the spreads aren't that great. Remember, there's always a cheaper way to get into the club, but sometimes the best way to get into the Broadcom club is just trading something else. Meaning the party that might go down here at Club AVGO, you're probably going to get the same party over at Club QQQ. We all look up in 4 weeks and boom, QQQ is back at 390. Then any technology semiconductor related that looks like Broadcom, it's probably going to do pretty well. So in plain English, long QQQ, it's kind of similar to long Broadcom. I'd kind of view it as the same trade as long Microsoft, long Amazon, etc. So sometimes you can express the same idea through a cheaper product. And a lot of times it's just the indices. But then if you are dead set on playing Broadcom, there are ways to get into that club cheaper as well. You can do out the money debit spreads. You can buy out the money calls. It is a nice setup, though. But I think, frankly, getting long QQQ on your next dip, that does kind of cover a lot of your bases, right? You've got your Amazon exposure, you got your Microsoft exposure, you got your Meta exposure. So if all of the setups in the individual names I showed you this morning worked, they're going to work because QQQ is leading the way. Things to consider. Okay, yeah, if Broadcom's got earnings on December 7th, personally, my cutoff is about 2 weeks. If we're 2, 3, 4 weeks away from earnings and you've got a really good setup, I think you can work with that. For me, if we're 5, 6, maybe 7 days out, it is cutting it a little bit close. All right, let's go check the futures here. If Powell is timely, he should have just started his spiel. Let me do a little math here real quick. We're all, or I can't speak for all of you, but I'm waiting on that dip. There is a chance that the S&Ps have got to give a little kiss to 4,400 before we can actually get that dip. It's like a little bit of a heat-seeking missile. They launched the thing back here. It might want to kiss 4,400, and then maybe we get the buyable dip. So let me see, 43.78 is yesterday's closing price. 4,400 would require it'd be about a 0.5% move for the SPX to actually tag 4,400 today. So keep that in mind. That might be the GPS destination before we actually get any kind of pullback or dip of substance. But all right, guys, I got to let you go here. I got to hit the road in 10 minutes. So to reiterate, the swing trade game plan's pretty straightforward, pretty easy. You're going to wait for that morning with the Qs, Amazon, Tesla, Meta. They're all down 1 or 2%. And then from there, you're sitting and you're waiting. I'm not preaching if QQQ gaps down tomorrow. I'm not saying be the first guy or girl to buy it. Wait for that pullback, and then put the faith in your indicators. QQQ pulls back, and then everything starts to settle down. You're getting a fresh 5-minute buy signal. You're getting a fresh 15-minute, a fresh 30-minute. Wait for the dip. Wait for things to look like they want to continue higher. And then I think we got a lot to work with. Broadcom is solid, Amazon, Meta, Google, Microsoft, Tesla, all the big boys. All the big boys. And then for day trades, futures trades, call it income trading versus swing trading. What I would look for today, if the SPX does get up there to 4,400, then I would look for a fade. Same rules apply, though. If we get to 4,400, I can't just blindly get short. But knowing we're a little bit stretched, if we do work our way to 4,400 and then we're getting a fresh 5-minute sell signal, you're getting your first 15-minute sell signal, then we'll probably do the overnight call credit spread. Got to get the level, and then we got to get the trigger. But all right, y'all, make it a good day. And making it a good day might mean you do nothing. Sometimes it is the best trade. But as always, thank you for your time. Always appreciate hanging out. Hope you have a good day, and I will talk to you all ASAP. Adios, amigos, amigas.